We have an exciting topic, and the topic overall is really financing the decade of action. And we, as the UN defined some 10 years ago, the Sustainable Development Goals, which made it, of course, easier to understand how you can do sustainable things. But also a lot of the problems the UN has overall is that there's a huge financing gap. And that's a big problem that a lot of people are talking about things, but not necessarily doing. So in my field, in the impact investing space, actually very often, you have people doing amazing things like green bonds, where you don't know where the money really ends up and how much is storytelling or not. Also beyond the fourth industrial revolution and the data revolution, where everybody is connected and information flow is connected as we all talking here. So we have some benefits and we have some issues with it, where we are in the so-called post-truth era, where the story is more powerful than actually facts. And I'm not talking about politics here. In none of the countries, I'm really talking about getting things done. So I'm really glad to be here with Saskia, Kimberly, and Diana. Such a diverse group, and I'm not talking about the gender piece because I'm the outsider, but I'm really talking about the businesses you do and run. Maybe before we dig in deeper into our topic itself of financing the decade of action, maybe we can start quickly here of an introduction. Diana, would you start with, please?
Thank you, Florian. My name is Diana Wangari. In terms of background, I'm a medical doctor. I trained in Nairobi, Kenya, and practiced in the East Africa region. Then I ended up co-founding a social enterprise that was focused on healthcare and just providing access to healthcare services. And this was based off just the gap that I saw during my clinical practice. And raised capital for this startup. We went through a phase of grant funding, debt, and eventual equity. I exited the startup, went for further training and education, and just based on some of the gaps I saw as an entrepreneur in East Africa, and I think particularly as a female entrepreneur, I decided to focus then on supporting other female entrepreneurs to just access capital. And now I'm principal at Lens Africa Fund, which is a gender smart gender lens investment fund focusing on sub-Saharan Africa.
Great, Diana. Also, really, if you look at what you do basically and the focus where you are, talking the theory of change in a language of an impact investor, access to healthcare, and gender lens, big and huge topics, which have its pain point, but let's dive a little bit later into that. Over to Kimberly.
My name is Kimberly Abbott. I am the CEO and founder of Vested. I'm actually an engineer by background. Much like Diana, I had a social enterprise background. But most recently, I found myself working for the UN, as Florian mentioned, and I was actually tasked with building the platform that would use data to assess the impact of the 8 billion they spend on peacekeeping every year. And it was kind of through that experience that I was introduced to this problem about how do we actually finance and close this gap on solving the SDGs. But also one that really struck me was how do we actually then decide where that money should go? How can we be accountable for that it's really having an impact? And I liked what Florian said about what bugged him about reducing the storytelling. So I started Vested, which is a company that is a platform that basically uses data to assess the impact of companies, products and services. So we can kind of use data and start to help inform where this money should go and how we measure it. So my experience kind of, came from how do we better enable and direct this money that's needed. Being an entrepreneur myself, I share a similar journey to Diana, and I think when you're going to meet Saskia in a moment.
Wonderful, Kimberly. So a physician, an engineer. Let's hear about you, Saskia.
Thanks so much, Florian. So yeah, you have a tough panel to moderate here with 3 strong women. So I hope you'll survive until the end of the session. But in any case, yeah, my name is Saskia Bruysten. I'm one of the co-founders and CEO of Yunus Social Business, and have just mentioned to Florian in advance that I've been in the sector for a decade. Yes, time flies. It's been quite a long time. My background originally was that I was a boring management consultant, but I did enjoy that as well at some point. But then later on realized that I wanted to use business as a force for good. So I'm very much coming from the business side, but really wanting to address problems with it. And we do it we basically work in two different ways at Yunus Social Business. On the one hand, we have a philanthropic venture fund where we invest in social businesses at the early stages, provide them long-term financing and support to grow, to actually build, help bridge that gap between companies not being ready for investment, but at the same time, obviously impact investors or more commercial investors saying there is no pipeline. So that's kind of the place that we're trying to fit into and support and trying to fill that gap. And then on the other hand, we have a second part of our work where we say, look, it's not going to change, like we're not going to manage to finance the decade of action just through local social businesses. We also need to get the big tankers, the big corporations to change their course. And we need to make sure that they steer in the right direction too. So what we're doing there is we have an arm where we build corporate social business ventures with these big corporations using their core competences to solve real social and environmental problems. And so that's why I think that part is really important in the overarching approach that we have, sort of a top-down and a bottom-up approach at the same time. And I'm super excited about the discussion today.
And of course, you have a big name behind you. Yeah, behind you with Yunus, Professor Yunus, of course. I had many years ago, pleasure to moderate an interview with him at his time, which has a different angle originally where you came from, of not necessarily pushing the profitability itself, where we, as Bamboo Capital, we're very much relying on the profitability, which is very often a challenge. But again, our focus is really that we laser focused on rural essential services. So we do private equity and private debt for commercial companies servicing the rural population. So it's typically, of course, microfinance, access to money, access to energy, off-grid solar, access to healthcare, by the way, also here, a portion of it, access to education, a lot of smallholder farming in pieces, and technology has been now kicking in. And technology, of course, finally resolves access and affordability for goods and services. So finally, the unlucky born, because we believe we are very smart, but I have a question about it. We are lucky. I'm German. I was born after the Second World War, not before. So I was lucky on that end. Did a good school and did my portion, of course, do my way. But now, why would people move from a poor country to a rich country or from a rural area to a city? Is to get access to economic inclusion, to a better life. And that is where technology actually is reverting a big trend in a very exciting way, where you have rural connected homes. Where it's financed, where technology is a price point so the population can pay it. So there's a lot of things really where I believe the decade of action really will be a decade of action. Much more actually in the areas we don't have to disrupt. We don't have to raise gazillions like Tesla, to disrupt the car or the oil or the energy markets. You go in areas where you can leapfrog. So probably I look at also a little bit as a judge here on the different amazing companies all of you manage, run, created, founded. It's in the same sense that really something is kicking in where sustainability is not just about doing good, but it's just using impact investing capital as a force for good, or you running a business as a force for good. So in a sense, I would like to just open here the discussion, feel free. And also, by the way, of all the ones here listening to, feel free to ping some questions to challenge us. Because my first statement is actually one of my experiences when talking about a social entrepreneur. It's more about the entrepreneur and less about the business. Now, what is it you motivates when you talk about action? And what is the financing portion? As we know, we have a financing gap you would need for. Maybe who wants to go in first here?
maybe I'll come in right there. So first of all, absolutely. That's why actually I see what you're saying with a social entrepreneur. And we had a little pre-discussion here where you were saying there are lots of social entrepreneurs out there that, you know, take the fame but don't have a big impact. That's what I heard you say. And to be honest, Florian, I don't fully disagree with you on that one. I do think that indeed that is also in some cases a risk. I mean, we've had that. I've seen that myself, that social entrepreneurs, of course, then you know, their stories get told, etc., and eventually they spend more time on the prices and less time on their business. So that is definitely a risk, especially if it's all about actually scaling that impact, because like the story is just as nice if you have one impact, or if you have 10 impacts, or if you have 1,000 impacts, the story is the same. So I guess that's where you're coming from. Now, that's why also we're at Yunus Social Business actually really talking about the social businesses. So it's not the entrepreneur itself in the foreground, but it's actually the company that they're running. And we're also talking about businesses, since you just hinted at the fact that we don't really focus so much on the profit. It is true. The thing that we care about is the social impact that that business creates, that social business creates. But we do need that company to be profitable, because we give them a loan. That's our model. That's the way that we are actually financing these companies. And we do want that money back to be able to then finance somebody else and then finance someone else, et cetera, et cetera. So for us actually, and that is really essential in our approach, you do need to obviously be able to find entrepreneurs that are willing to build sustainable business models. But also, we all know it's also not super easy. If you're serving the poor, if you're serving the bottom of the pyramid, it's not super easy to right away get all of that done. But yes, so I just wanted to make the point, absolutely, the business model has to be very front and center, and it's not just about the storytelling. You need the business model, otherwise the whole thing is just a show and not a business, and not something that's going to generate impact in the long run. So
Saskia, as I understand, you do venture philanthropy as well as for-profit investment. Is that correct?
So basically, Florian, I should clarify. Yes, so we finance ourselves in part through philanthropy, in part through impact investing. So we have the two options depending on the country and the local legislation. We ourselves only give out loans, so we do not give out grants. We just give out loans to the entrepreneurs, and next to the loan, we also provide services to help them grow. In brackets, there's one exception. During the time of COVID, we did give furlough payment grants because we felt there is no impact, like there are no investments to be made in companies that won't exist in a year's time if we don't make sure that these companies survive. So that's the first and only time so far that we've actually given any grants.
Perfect. So maybe in that same sense, now, Kimberly, you on your end, you said you've worked for the UN, the big blue elephant, sometimes people say, you know, where you don't know whether they live for the poor or live off the poor. You know, there's a little bit big discussion on that. I mean, we also we run actually funds with UN agencies, which work on and operate on the ground, doing amazing things, by the way. So very positive. So what is your experience in that financing component, and where is it you're struggling with, and where would you be excited about?
Yeah, I think, I mean, that's the big blue elephant is sometimes the elephant in the room. But I'm kind of with you there. And I think a similar thing to Saskia, when I had a social enterprise, it was profitable, but we couldn't scale the impact. And we actually shut it down for that reason. And then I'm in a position now as an entrepreneur where, because I have investors, I'm required, you know, to deliver returns. But I think the goal of anyone with a social intent, I often say, if they don't have the intent to make themselves redundant, they're in it for the wrong reason, because your aim should be to solve the problem, to leave. And I do question that. I mean, I can't speak officially on you know, behalf of the UN or anything like that, but I do sometimes question that you know, the idea should be to have an impact to solve the problem, that you're not needed. You know, to empower the local people or to fix the problem, and then you move on. So I think that is a mindset shift, especially hard if you're a business and you're focused entirely on profit. Because sometimes if you're focused on profit, the incentive is to create more of the problem. And so I can see where this shifts, and it becomes, you know, I think you raised an interesting point, Florian, where you said actually the problem with social enterprises, it's all about the entrepreneur. I challenge that in a way to say it is all about the entrepreneur in terms of the mindset of the person in charge of what is driving things. I think, is it about the entrepreneur in terms of the media and that? It should never be. I think Saskia's right, it's about the business, not the person. But I think it's the person's mindset, the ability of the people, I'm deployed with UN at the moment doing some work, and the people that sit there every day and you think, your job isn't to come to work to every day, your job is to try and make your job not exist. So I think it applies to any social thing. And the only other thing I'd add is I think this trade-off between purpose and profit and impact and profit is narrowing quite a bit. I mean, at Vested, we see the data of companies, their impact they have, and obviously compared to the profits they make. And I think that fallacy that you can't make money and make a difference is starting to be disproven. But I'm gonna stop there. But that's my thoughts on this.
But that's a perfect segue, Kimberly. And again, I have my doubts about a trade-off. Yeah, for me, I would say risk-reward scenarios. Yeah, you can go riskier. Yeah, sometimes the reward is not there, and then you have a gap, and you might fill that gap. We have seen actually non-for-profit money coming into being catalytic just to take the risk off, so that we can still do what we want to do, which is one of the components. But absolutely, in the same way, that this is a fallacy. Yeah, again, now, I believe also that you're right in terms of social entrepreneurs, the main motivation is to do the social good. Now, it shouldn't be at a price. It should be doing it right the way. And that brings me over to Diana, because you specifically mentioned in Sub-Saharan Africa that one of your struggles is to remain true to your vision versus pleasing the investors. So I would love to hear a little bit more about it.
Yeah, absolutely. I think first I'd maybe want to again just echo what Kimberly has said and challenge you on the point about the focus on the social entrepreneur. I think often when you've founded the startup, it's a team of 2-3 people at the beginning, right? And I think it's often critical that that spotlight being shown on the entrepreneur is critical for awareness purposes sometimes, right? And now when we dive into what the model is, right? And this is now coming to your question. It's always been a fact that, yes, you've come up with this business idea, or this is the purpose, so this is the gap that you want to address. But then where's the funding being directed, right? And just going off through my experience, we started off with grants, right? And often there's the mandate, there's the proposal, right? So for example, we're doing reproductive health and they want to focus on reproductive health, maternal child health, right? You'd want to put in a grant and say, you know what, you want to charge for your services, right? But they say, how are you charging the poor for a service, right? Yet you're meant to sustain your business. Then, okay, I'm meant to apply for a grant, get the grant funding. Then once it dries out, what happens next, right? So that becomes the first point. And this is me and many entrepreneurs who are just starting out, right? Maybe you've survived on family and friends, right? Okay, fine. You've applied for the grant. You've gotten your first funding, right? It's gotten you so far, right? Now you're looking at, okay, what's the next level? You're trying to get in some revenue through the door. And at this point in time, you can't now, go back to the same grant proposal or the same body, right? So you're diving into this debt kind of convertible loan kind of phase. And at that point, then it becomes the challenge of, okay, you're trying to get in debt, but what's the revenue you're making? But remember, at the beginning, you're asked that, hey, how can you charge the poor for services, right? That's another cycle. And you find yourself constantly saying, yes, I'm trying to address this gap, right? And this is my thought, right? This is how I think it could be sustainable. But each investment body, whether it's or capital structure, has its own mandate, right? Which they follow, right? And at some point, it's not so much about the business you're running, it's about chasing capital. And that becomes now the purpose of the entrepreneur, right? If at this point in my fundraising cycle, or sort of in this sort of capital structure I'm trying to, or term sheet I'm pursuing, if this is what they require, do I need to adjust my model so that, I can get the capital? And that's the trap so most entrepreneurs face. And just because the access to capital is that limited, it's a vicious cycle, which most entrepreneurs end up giving up. They're like, you know what, I've tried. I've tried, yeah. And the support is limited, right? And so it's a hard job, isn't it?
Absolutely it is. And again, you trigger several points here. Again, sometimes grants are necessary to get a business off.
Absolutely.
But sometimes grants are distorting to get really a business off. Yeah, because it's one-off. And we've seen that especially in Africa a lot, in areas, agriculture, where you want to give a loan or want to put some equity in to help. But why wouldn't you? Because the access is there. And at the end, the ambition, the pressure is not there to have a really profitable model. Yeah. And then when it becomes tough, the guys say, okay, it's too tough. I tried. Yeah, and to move on. Even though understanding that entrepreneurship is sometimes hurts, mostly hurts. You have to keep going, Again, you do what you want to do, but then there's a caveat too. But maybe in the same sense here, we have actually a question from Colby Yoshimura, which is an interesting one, because you said, can you share your thoughts on crowdfunding, particularly for equity, less debt, rewards or donation based, but really equity? Yeah, and you wants to hear some thoughts on some other non-institutional high net worth opportunities to do the impact investing would be also welcome. So what are your thoughts here? Who wants to answer that? Yes, Saskia.
I would actually like to, if I may, actually, I still had a comment on what Diana was just saying before, if I may, before we get into the crowdlending discussion, if that's fine for you. And I think, Diana, what you just showed is sort of a little bit kind of that path from beginning to a growth stage in a company. Like, what are the different types of capital that you need on the way? And what I find so interesting in reflecting on what you just said, and I actually see that with a lot of the businesses that we also finance, is there's somehow never the right type of capital available for the right type of entrepreneur. And we see that, I don't only see that on the individual basis of the own portfolio companies and pipeline companies that we have ourselves, but what I'm seeing, and that is actually something that's disturbing me right now a lot, is that we're seeing that at the top, sort of at the financial markets level, there's somehow that supposed $1 trillion in impact investing money coming into the sector. And then again, I see people like you, Diana, and others that I see every day in our work that are not accessing the finance because somehow, there's no fitting type of capital. And so either, as you say, either they say like, you're not profitable enough, we can't invest in you, or, oh no, you're not impact driven enough, so we can't invest in you. So there's always some kind of an issue between sort of like what's happening at that macro level and the individual entrepreneur. So I really still see, after now also myself working in the sector for a decade, I'm super excited to hear that supposedly all this money is flowing into the sector, but I don't really see it hitting the individual impact businesses on the ground. And that's really where I unfortunately still see a significant gap. So that's what I wanted to contribute. If others want to share.
Saskia, which goes back to the question about equity. Because we've seen over the years that debt, from risk perspective, is actually low risk. Yeah, and very often, if even easily can companies, if they're a big enough size to get debt, or maybe some smaller ones. But the equity piece, it's much tougher. And you have to have more patient capital and things, especially in our areas, when you really look into the last mile approach, you have to stay in longer there, So right now, for example, COVID times, equity is tough if you're not technology driven. The technology companies are all going through the roof, whether they're in Africa, Asia, Latin America, but none are, because so you have to have enough time to go through that.
Totally. I mean, maybe my point on equity versus debt, again, also there, it depends a little bit on what you want to achieve. But actually right now, I would actually not necessarily recommend to all entrepreneurs to just like take equity right now, because your businesses are going to be very undervalued right now because you're in a crisis. So if you take equity now, you're going to sell like 90% of your business for nothing. So I'm just putting it out there as like a little bit of a warning. Of course, equity always feels a little bit more, gemütlich, as we say in German, because you don't have to repay it right away. But there are lots of strings attached to it, including the fact that someone else can actually decide about much of your business. So just putting it out there. So while equity has its advantages as well, it has a lot of disadvantages as well. And the type of debt we provide is more, let's say, equity-like in the sense that it's flexible in terms of repayment, but that's another story.
Yeah, flexibility is one thing, but you have also an equity investor on your neck. Sits on the board. He's a shareholder of your company. He puts a different pressure.
Exactly.
Yeah? That's
which can be good or bad, which brings us back to the point. How do you find mission-aligned investors that fit with what you want to do? And I think that's the crux of the matter, to actually find the right fit between the business and the investor. That's
actually, Kimberly, we have a question here specifically for you, saying, have you ventured into trying to make UN or international corporations loans or grants more efficient and transparent through your company and system, to ensure that the proceeds and use of grants or funds are done efficiently, not destined to the same project twice, not getting lost in administrative fee? That's from Pedro Hansen, the question.
Yeah, I think, Pedro, you've got a brilliant grasp of the problem, because that's kind of exactly, in a way, what we've done with Vesta. In our work, obviously, we look at, first and foremost, trying to quantify and measure and assess impact, which, as we all intuitively, I think, get incredibly difficult, because you're effectively sometimes trying to measure the change in human lives. So, as best as we can, we pull in all this data and we do that. I think your example, and to give you a concrete example of exactly that, what we did do with Vested for Senegal. So as a country, we took a country, we worked with UN country team there. And what we did was we put all kind of UN investments in, we put all DFI, so foreign investments in there as well, World Bank. And then we also we just picked 5 for the sake of it. We put all Senegalese government money in, and we also took just 5 kind of VCs that we knew were active in Senegal and tried to put their projects through there. So we got this map of, basically this calculation of what SDGs at a target level are being funded, to how much, to what impact. And what was remarkable in doing that, what you've said on the efficiencies, was there was an investment made, by an agency, and then there was another one that came in, and you thought, if they had been able to see what was happening, you make a decision saying, I'm either going to amplify the impacts that are existing, so I'll invest it there, or, sometimes there are negative effects. So you actually want to invest to mitigate, a negative effect. And so we did exactly that. And that is we flipped that to the capital markets. That's the same efficiencies we're trying to change. Like Saskia said, we built Vested to do the bottom up, to actually help social enterprises and impact those companies get money. And we realized that actually, if the money's coming from the top, we need to do the same to show the inefficiencies of this sporadic spray of this $1 trillion isn't helping unless we have a common picture about where it goes. So yeah, that's a kind of tangible thing of what we've done and what it looks like. But it's getting the people to really, particularly at the high end in the corporate thing, and I know most of us have had experience with corporate and institutional investing, getting them to care enough about the impact to make decisions based on that very kind of thing. You can put it in front of them, but you need them to care enough to change their behavior and decision making.
So Diana, in that sense, question to you on that, because Saskia opened that up, and we have a comment here also, really clearly saying that Henry May agrees with Saskia, and the fit is vital. So what is the best fit for you in terms of investor?
Me? No,
Diana.
Sorry, I was confused.
First, I agree absolutely with what Saskia mentioned, right? That the fit is critical. And I think it's critical on both sides of the table, I think, as Henry mentioned. And a big part of it is looking at the region you're investing in, right? Because I do remember one of the earlier challenges was that if this is the model that has worked in the West, right, why should it not work maybe in East Africa, for example, right? And in the first in the earlier stages, I remember having to have this multiple discussions around technology, right? Why is it that a technology solution is not a solution in sub-Saharan Africa, right? And that's a whole ball of wax in its own, right? But I think it's critical to evaluate that this is what my purpose is. I want to take maybe the next 3 years in my business. I'm not looking at scaling to 54 African countries within this time frame, right? And if the investor on the other side is saying that, you know what, I'm looking for a rapidly scalable model, then maybe that's not the fit, right? It's not just about the capital. It's about what do both of you want to get out of it, right? And I think that's a process that sometimes we just go over because we're focusing on the financials as well, right? And applying models that maybe have worked in one country, one region, to just, you replicate it as well, right? And I'd put a challenge to Kimberly, a point she raised, right, in terms of just showcasing visibility. Yeah, I think one of the challenges we experience, and I'm talking right now as an entrepreneur who eventually shifted to this investment on the other side of the table, because these are the discussions I want to bring to the other side of the table. But I do remember one of the challenges we'd have in terms of just grants from, say, World Bank, some of the projects being funded by UN agencies, right? It's, again, back to that fit and that model that, yes, we want to work with rural communities, right? We want to provide funding through governments, right? But then what happens after the funding runs out? And I feel like that's a question that we're not addressing, right? That we're not showcasing, yes, these are the challenges, this is where the gaps are, but what are the alternatives, right? We're talking about what the challenges, where the gaps are, but what alternatives are there, right? Do we need to move to more public-private partnership models? Do we need to focus on what are the alternatives? Because outside providing, what are the problems? What are the solutions as well, right? That's another element of the conversation as well, yeah.
That's a good question, because we're getting here a little bit challenged. Because one could argue that VCs prioritize business valuation to exit and realize their ROI profit versus a sustainable long-term growth and increasing value to all shareholders, including, for example, sustainability, with the common goal. Thus, capital raises through crowdfunding is an area of interest for me. Any thoughts on that?
Yeah, and maybe on that point, I mean, a typical VC definitely has exactly that goal, to come in, have a major growth trajectory and then exit, right? So that's why also we are somewhat weary to co-invest next to some really traditional VC, because there's just a complete misalignment. We would say to the company, go and get profitable. And the VC would say, no, invest more. So you're not profitable, but you can grow faster. So that would definitely already be for us, even as an impact investor ourselves, something that we would stay away from. Now, Colby, to your point on crowdfunding, honestly, I think it's awesome. We've been working in the past, for example, with Kiva. So Kiva is obviously, as some of you may know, a micro-lending crowdfunding platform where millions of individuals can give $25, and it comes to Kiva, and then Kiva on lends it to microfinance organizations, but also organizations like ours, and by now also individual social businesses, usually at no interest or very low interest. So they actually give crowd loans also out. That for me is a fantastic example. You also mentioned crowd equity. Also is a good model. However, there are all kinds of governance challenges linked to it. So there are models that create a virtual cooperative that are then sort of the owners of your company, but that seems a bit more complicated to me. But honestly, crowdlending is great. And what crowdlending is also good for, it helps you create a community around your company. So, if you have a business that, for example, exports somewhere or sells somewhere, you already have customers attached to it as well. So there are all kinds of positive examples, but crowdlending, of course, takes time, and it's quite an effort on the whole PR and communication side to actually get it that you actually can raise a significant amount of money. But it's cool. I can only recommend it.
Yeah, we're actually looking at technology, on several levels. Of course, once we invest in a lot of the same sectors, but now tech. So it's fintech, clean tech, ed tech, agri tech. But then also when it comes to how we manage our money, looking on the technology side, but then also from a fundraising point of view, we are regulated investment, investment manager, asset manager. So we can only at this stage receive money from qualified investors or institutional investors, which is a limit, not being there to fully, let's say, democratize impact investing. But on the other side, back to what you said, it's funny, we're seeing sometimes, that the company has difficulties to raise funds because either it's not fitting the right SDG. Oh, SDG 7 only. So now you're slicing the rural population into SDGs, very nice. Yeah, or it's just equity, or it's just debt. We've actually, one of our funds is together with CARE USA and ITC, the International Trade Center, a UN agency on trade, which on gender justice, women-led, women employed, or women benefited, and it's a debt and equity fund, but it's illiquid, therefore very tough to raise, because people go like, what is debt or equity? It doesn't, and the returns are not the equity returns, neither the debt returns, but in between. So it doesn't fly. So sometimes those things have tougher on the raising side, even though we know we would have the full flexibility, to do it. A loan, and convertible, and mezzanine, maybe some equity then, and really over the years to accompany the businesses. But it's one of these challenges we have here.
I think, Florian, to come to I think that's a whole issue with the whole social business or purpose business sector. We just do not fit into the boxes that are out there yet. That's just the problem. The boxes are just not there yet. I feel that they're going there a little bit more, but we just still do not totally fit into those boxes. That's why people just don't know how to deal with us.
Good
but
point.
We're working on that. We're all working on it.
So we have 3 minutes left, as I understand the numbers within the SDG ring. So
now we're supposed to talk about SDG 3, Tom. Says Tom.
So we go 17 down on the SDG.
Exactly.
That's good. So just to wrap up, what would be your message out to all of your peers here on the meaningful business side, and to challenge a little bit Tom also on his end? You want to give very quickly 30 seconds from each of you. Diana, we have all eyes in the air up. Just a quick message. Is there something you wish for?
I think the message is that we sort of have to create our own paths, right? And since we don't fit a certain box, right? We need all the support we can get, right? And we just have to create that path, right? And if you can send someone and be like, you're thinking, you're aligned in the same path, then the two of you go ahead, right? You don't have to be 100, right? So that's all. Just make your own path, yeah.
Perfect. Next, Kimberly. Okay, Saskia.
No, go ahead. Okay, anyway, I'll go ahead. I guess, first of all, I think it's amazing to have these 100. So I think we should bond together, because there are not that many crazy frogs out there, like all of you in the room, all of you in the overarching room. So would love to actually see if there are ways to work together more, because we can create this coalition of the willing in the most positive sense, that are all people that are moving in the right direction, and to just work together more, I think is the only thing we can all do together to ensure that this topic that is currently not still perfectly fitting the boxes is going to be the box in the future.
Wonderful. Kimberly, 1 minute left.
Yeah, I mean, I'm going to sound like a broken record and then kind of say the same. I mean, my message is really that we've talked about the top and the bottom, but really the power lies with us, because that trillion may sit with the top, but they make decisions based on, us and how clients and consumers are driving them. So yeah, I'd say to everyone, I mean, advocate, plan what you want. Like Diana said, take the path, because I think from a financing perspective, every time we spend our money, we're voting for the world we want. and it's our money, so we do have the power. So that's my final message.
Okay, wonderful. Thank you so much. Thank you for joining.